but that one space which has completely been re-rated has made tons of money for investors, and almost everybody believes that oil is well and will continue to do, and that is the oil marketing companies. I think it makes just perfect sense to get IOC at this point of time and talk about how does Mr. A.K. Sharma, who is Director of Finance of IOC, foresee the near term and the medium term as well. Mr. Sharma, so good having you. Thank you so much for joining in. Can you hear me, sir?
Yeah. Yeah.
Okay. It's so good having you. Thanks for joining in. Now, you know, almost everybody who is anybody believes that oil marketing companies, by and large as a basket, are a place to be in because of the changing fortunes. Demand in petroleum has grown. The losses will come down significantly, and a lot of other factors. Let's start off with the first factor. Indian petroleum demand, 11%, highest in a decade. What do you think is driving this?
See, basically, the growth is driving because of the growth in the petroleum sector is more driven by the growth in the Indian economy. When there is a possibility and everybody is seeing there is a growth in the Indian economy, the petroleum sector has to be the driving force behind the growth. So, and secondly, the lower petroleum prices, they have also contributed in the growth, particularly in the petrol growth. The change in the customer's preference from diesel to petrol is driving the growth in the petrol.
That's great to hear, Mr. Sharma. Good morning. Indian oil companies are still dominating about 97% of the fuel marketing sector. How is the overall space growing, and within that, how much is the IOC space?
See, the way the growth is seen in the petroleum sector, there is space available for everybody, including the Indian Oil and the private sector. And we see that with the growth being there and IOC being the dominant player, we will continue to play the role of a dominant player, though there will be space for others also. As you can see, the way the demand is growing in the country, there will be a deficit of the petroleum products in the years to come. So there will be enough space for all.
Okay.
Yeah.
You know, a lot of analyst notes that come out, Mr. Sharma, speak about 3 or 4 key things. One, that return ratios will improve dramatically. A lot of assumptions go in also that there will not be any more inventory losses. Your EBITDA ex Paradeep would essentially be a very healthy number, with crude having recovered almost $10, $11 as well from the lows. Are these realistic assumptions?
See, one is that you have touched upon the crude oil prices. I will say that yes, the crude oil prices, the expectation is that these are going to remain somewhere around $50. So that's a reasonable assumption. And with that assumption, and also assuming that the cracks, that is the difference between the crude oil prices and the petroleum product prices, the cracks are going to be in the range of $10 to $11. It's reasonable to assume that the GRMs could be above the level of the $5 in the year. And both the assumptions being there, but the only thing is that the cracks, which if you see the last year, particularly in case of the petrol, the cracks were very, very high, very good. And as far as the diesel was concerned, these were extremely volatile. So, and now the situation is reversed. Now the cracks on the diesels are fairly okay, $10 to $11, while on the petrol are $6 to $7. So things keep on changing. It's the international market, overall demand and supply drives these. So it's difficult to make any assumption, particularly on the cracks.
Fine.
But with cracks being 10 to 11 and dollar being, when the crude being at this price, GRMs could be good.
Okay. So if all of these factors are taken and near normal assumptions for the rest of the year, do you think 10,000 crores of EBITDA ex Paradeep is a realistic possibility for IOC in FY17?
I would not like to predict on the profits of the company, But yes, I would like to say that with the commissioning of the Paradip, with the various efficiency improvement measures which were taken by IOC in last 1 year, particularly the improvement in the distillate yield by more than 1.5%, and the drastic improvement in the energy efficiency, and the reduction in the cost of the crude by way of adopting various measures for procurements, I think there should be good sign for improvement in the profitability of the company. While it will be difficult for me to predict on the profits, it depends on various factors, international market, cracks, crude prices. But I see, yes, there are positive developments, and IOC definitely should be doing better.
Good to hear that. Mr. Sharma, you just highlighted briefly about your GRMs as well. You're expecting an uptick in excess of $5. But would you say that $5.5 to $6 per barrel would be a bit of a stretch? Or do you think you'll be able to do that? And more importantly, highlight for us your borrowing costs as well. You know, by how much have they come down in the last few quarters? And what's the outlook now going forward?
See, I would like to say that the borrowing cost, the reduction in the borrowing cost, which was almost 3,500 crore last year, and has come down to 3,000 crore in the year 15-16. The reduction is primarily driven by the reduction in the working capital requirements for the company, which is again a factor of the reduction in the crude oil prices. So working capital requirements have come down. The another factor which plays a role is the reduction in the under recovery, and our dues, outstanding dues from the government have also come down significantly as a result of the government policies on early reimbursement of the under recoveries on kerosene and LPG to us. So going forward, I see the borrowings level to remain rather lower, and the interest cost to be slightly lower than what we have seen.
And your GRMs of $5.5 to $6 to a barrel in FY 17 to 18, is that a fair estimate?
It will be, as I said earlier, it's difficult to actually predict the GRM and the profitability, because there are various factors. As I said, the most important factor is the crack between the crude and the product price, which is so volatile. If the cracks remain in the range of $10 to $11 and crude prices remain at around $50, then probably yes, 5 should be doable. 5 plus should be doable. But a lot depends on how the cracks move in the international market and what are the timings of those movement of the cracks and the crude prices.
The government has allowed 25 paise per litre per month on kerosene as well until March 2017, if I'm not wrong. How do you see this impact, and do you see the possibility of this continuing post-March 2017, or will there be a pause after that? Because this is an unprecedented step, as we all know.
Yeah, this is an unprecedented step, but it was long awaited actually. And if this step has been taken by government, I think they must be having something in mind for this. This eventually does not affect the oil companies, because ultimately the under recoveries on the government will come down. So I think if the decision has been taken by government, they must have given a thoughtful thinking to this. Maybe a part of the larger reform process which the government has been undertaking for last 2 years.
Okay. Final question from my end, sir, and updates on the Paradip refinery, because almost everybody believes that the break-even GRM will be lower than Bathinda or Bina, and this will help you massively in your margins FY 18 onwards. Can you give us some color there?
Yeah. Yeah, definitely. But as far as the other refineries, what you have named, they are basically the landlocked refineries. And Paradip is a coastal refinery, which is ideal for any refinery. So it will have all the benefits of processing heavy to very heavy crudes, and the entirely it's high sulfur crude it will be able to process. So definitely it will have the advantage over the other refineries, and it's the most modern state of art refinery in the country. it will have the best, it has the best of the technology. So we are quite confident that the refinery will turn out to a very good GRM. It will be a big boost, it will give a big boost to the IOC's profitability. We will have to give this year for the refinery to get stabilized, because one after the another unit are getting commissioned, and by the year end, on an average, refinery should be running at more than 70% on an year average. While by the end of the year, it may go more than 80, but on average basis, it should be running at 70%, but it runs on an average more than 90% or 100%. Yes, the full potential of the Paradip in terms of the GRM will be visible on the Indian Oil balance sheet, Indian Oil profitability, and I am quite hopeful for that.
Mr. Sharma, just such a pleasure having you on the show today. Yeah. Thank you so much for joining us today on ET Now. That's the view.
Thanks.
That's the view then coming in from IOC, and just hearing the management, Neeraj, no wonder the entire OMC basket is such a chased sector right now.
And the re-rating for IOC in particular, it's been a laggard for a really long time compared to the other two peers. Somehow, on the charts, in terms of how the move has been, it's just playing a bit of a catch-up as well. And maybe rightly so. So good going there for OMCs by and large, as you rightly said, and IOC in particular as well. Hopefully, Paradip should help them in a big way on their operational front as well, margins front, and that should augur well.
Yeah, and just look at the kind of returns that OMCs have actually made in this year. Just want to go back to that chart price as well and talk about how the returns this year have been. IOC has clocked up almost 25.6%. HPCL has held out almost by about 45%. And BPCL as well has had a phenomenal ride this entire year. That too has made double-digit returns of almost 33.5%. So that is where we have seen this kind of huge wealth generation, so to speak, in the entire OMC pack all of this year. But just take a look. Today,